This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end-of-day trading video for S&P 500 futures, day trading, and swing trading for Thursday, April 2nd. What you see on the screen is one of the coolest charts you'll ever see, and we're going to come back to this in just a minute. Let's take a look at the two-panel. This is the swing trading algo on the left, day trading algo on the right. I want to take a look first at the day trading algo. And this just shows you Tuesday, Wednesday, and today. We were aggressively short into this high. We were short at 23.50. You see the waterfall decline. Now, there's nothing unusual about that. I mean, we see these kinds of things frequently when the market is overbought. Then you get a short covering rally. Nothing abnormal about that. But this, what we saw today, spike down, spike up, spike down, spike up. I mean, this is, I've never seen this before. 35 plus years of trading, I've never seen this kind of pattern. But I can tell you it's not good. And I'll show you that when we go back to the larger chart. As we zoom in on this, we got this move down yesterday. And what was weird about yesterday late afternoon is as price came down towards the end of the day into 24.50, it wasn't a violent decline. It was just a slow, meandering situation where the bid just walked away. And then finally you had this spike right at the end of the day down here into 24.30, 24.20. And then we get the spike back up, and forgive me a minute, I'm going to pull the chart back a little bit. This was yesterday's end of day. We got the move down off the horrendous jobless report. And then we get this action, fast move up, fast move down, fast move up, and then it starts to roll over. Now, one of the things that I did today was right at the end of the day, I put another swing trading short on at 25.23. There's that number again, and that just occurred to me that the short here was 26.2350, and then today was right at the end of the day. It was after the regular day session. Put this on 25.23. Took a little piece of it off down here into the low 24.90s. Just to get some risk off so that I don't wake up tomorrow and have this thing go right back up. So we've got some profit booked on that already. We also entered a swing short this evening. The first short this evening, fairly early in Globex, was at 25.09. And we always like to get risk out of the trade quickly. As soon as we get 3, 4, 5 handles, we take profit on a third of the position, and sometimes we'll adjust the stop to even, sometimes we'll give it a little bit more room. But the whole idea in a market that is trading this violently back and forth is when you're in a trade, you have to take a little bit of profit as soon as it starts going your way, and that's why we recommend you trade in thirds. So you can take the first third of the position off, get 3, 4, 5, 6 handles, whatever you can get, and then you tighten your stop so that way if it reverses, you're not giving your profit back. But the nice thing about trading in thirds is now you've got that first piece out, and then you can look for a place to take your the middle third, and give it a little bit more room. And then once you take the middle third, then you're just managing the runner, trying to trail a stop, give it enough room. And that really is the trickiest part. I mean, everything that we do is algorithmic, time, price, mathematics. But the tricky part that there really is no formula for is how tight to keep the runner so that you're giving it enough room to have a normal check back that fails, but yet not give it so much room that you're giving back too much of the profit. And so everything we do is based on math. But when you're talking about trailing a stop on that runner, it's as much art as science. And that part's a little bit tricky, but we're positioned well, short late in the day from 25.23. Like I said, we took some profit, and we've still got a day trade position on, which is now 2488. It's just midnight. And I have no idea what we get tomorrow, but I can tell you this pattern is not good. Over here on the swing trading chart, this red angled line is an algorithmic time price regression line. They may look like just a channel line. That's not what it is. When you take time price algorithms and you connect points together on certain specific time frames, you'll find price is magnetized to it. Comes down here, bounces up, comes down again, bounces up, and then it releases and breaks. And then it comes up again, falls lower, comes up right to it here, and breaks away. Comes up one more time, breaks, and then it releases to the upside. And so it just cracks me up the way price is constantly magnetized back and forth. And although we started this regression line up near the high, you only get this kind of very precise activity if you're connecting certain points together on certain algorithmic time frames. Time is everything. Even as random as this looks, this trading action, there's nothing random about it. In fact, if we take a look over here again at our day trade chart, you can see every day you get these very precise moves into these pivots. You can see there, we had this move higher, came down to this pivot. I'm talking about these horizontal lines. So you stop almost to the tick there. You come back up, you stop to the tick at our trend confirmation pivot. You come back up again, and you come right down to this green line, which is our multi-day trend pivot. You come down, you come back up again to the tick. So it does this all day long, and it looks random. It's not. ES trades very mechanically. It looks like whip and chop up and down, but once you understand and you unlock the specific time cycles that ES runs on, and this is exactly what the institutional algos are built on, these same exact time frames. And I want to mention something I say in just about every one of these videos. When I mention that these are the exact time cycles that the institutional algos run on, let me prove it to you. If you and I and everybody we've ever met in our lives pooled all our money together and created one big ES trading account, we could not stop the S&P futures on a dime to the tick the way it does on our algos. We couldn't do it once. Now, who has enough money to do that? Well, the institutional algos. That's why it comes right down to these spots. That's what their algos are designed to do. They're very, very specific, and although it looks random, and you pull this chart out, that certainly looks random, right? Well, look at where it stops. Mercury band extension here. Mercury band extension here. And all over the chart, you see these precise stops to within a tick or two. I mean, all over the place. Now, here's the problem with this market right now. We started aggressively shorting the market on January 22nd. Literally every spike up in price, we've shorted and shorted and shorted and shorted. Our algorithms told us that there was a big problem on January 2nd. If you go to our website, mercurysignals.com, one of the menu items at the top of the page says reports. Click on reports and you'll see, I try to do them weekly. Sometimes I'm not able to because it's very, very time consuming doing those weekend reports. If you go back to the report from January 25th, there's a report that's called All About the Math. Go back and read that report, and that'll tell you exactly what we saw on January 22nd that got us unbelievably bearish, and it's been incredibly profitable. Now, let me show you this other chart that we teased you with in the very beginning. These wavy lines are not just, moving averages. These are time price oscillators, and they're varying different lengths, everything from very short time cycles like you see in this white dashed line to very long time cycles like this very flattish purple line and this flattish cyan line, and you can see these longer time cycles are flat. Now, notice that in a typical market, you're going to have spacing between these. Well, what happens when you get all of these converging like they do over here, and right now all these oscillators, they converge together, coming from all these different places. Short, quick cycles, very long cycles, all converging between 25.10, 25.12, and 24.94. So right there in that 18 handle range, you've got all of these oscillators converging. Now, when you get that type of compression where all these wildly different time cycles all come together like that, then you get big moves. And you don't necessarily know what direction they're going, but this one is set up to go lower. But the point is, when all these varying long and medium and short time cycles all come together, compressed like this, you don't always know which direction it's going to break, but it will produce a violent move in one direction or the other. You can see how this thing is wound up. Now, I've gotten a lot of questions on Twitter and other social media about why I've been so bearish, and literally 90% of the trades that I've taken and that I've recommended on our trading service, and it's one of the reasons we do these videos. If you go to mercurysignals.com, you'll find information about our trading service, but 90% of the trades that I've personally taken, that I've recommended on our service since January 22nd, have been shorts. Why is that? Well, this chart here is the best illustration I can give you, because this is just this week. This is just since Monday, March 30th until today, April 2nd. And what all of these bubbles indicate is all the breakdowns in price. So here you have another regression line. Here you have a downsloping regression line. Here you have this cyan line, upsloping regression line. Failure, failure, failure right here, failure up in here, and this is where we were short. I mentioned that earlier, 26.23. You have a failure there. You have a failure through this algo, failure through this algo, comes down here, failure through that algo, there, comes down, comes back up to the purple one, fails, comes down, comes back up to the purple one, fails, comes down again, back up into the purple one again, fail, fail, fail. And this is just 1 week. Just 1 week. You can see all these failures. And so that's the reason we've been predominantly short. And look, we don't get every trade right. Today was a really good day, and then about 2 o'clock I was short and got out of the trade a little bit too early and tried to jump back in, and the market had different intentions, and it was still a profitable day, but I definitely missed this one. I did not trade this well because I was short down here, got out early, and then when it came back up, I re-entered it and took a little heat on it. But that's going to happen sometimes. But you can just see all these failures all over the chart. If you're interested in finding out more about our trading service, please go to our website, mercurysignals.com. And as a member, what you'll see is these live charts on your screen. We run this live chart on Zoom, so all you need is a Zoom account, which costs you nothing. All you need is your email address. And each day we give you a code so you can see the charts all day long. I'm on the mic pretty much nonstop. I'm almost 60, and I haven't shut up since I learned to talk. My mom will verify that. But what I do on the mic is walk you through the trades, talk about the setups, and then on our Slack channel, you've got every trade alert that I issue every day. They're all time-stamped. And just a little word to the wise, anybody tries to get you to subscribe to a trading service and they can't show you this, time-stamped trades day after day after day, don't bother with it. But we have a phenomenally profitable trading service. Just in swing trades in the last 2 weeks, I believe it's over 800 handles in the last 2 weeks on swing trades alone, not to mention our day trades. We're running a spring special, and we give you a combination service. So you've got the ES and NQ package. We used to have a separate package for bonds and crude oil. We've combined the two together and cut the price in half. So you're getting 2 trading services for the price of 1. And even if you don't trade bonds or crude oil, if you're trading ES or NQ, you have to know what bonds and crude oil are doing. They affect what happens in the indexes. And so we give you both those trading packages for the price of 1. And so we thank you so much for your time, as always. We've gotten some very kind comments. We really appreciate that. But thank you so much for your time. Most importantly, God bless you. God bless your family. Look, these are trying times in our country. But God is in control, and everything will work out. We all just have to have faith that there's something much larger than you and I, and that faith will help you and your family keep it together. And I certainly hope that everyone in your family, in your life, in your circle of friends is healthy. And we thank you for being here once again. God bless you. God bless your family. And we hope to see you again soon.